I'm going to talk about one of the simplest trading strategy that can be so practical for increasing profit. This technique is called breakout. Hello, I'm Dr. Trader Amir and welcome to my YouTube channel. At first, let me tell you about what does breakout mean in trading. Breakout refers to the price movement that moves on bricks outside a defined support and resistance levels that usually accompanied by increased volume. Overall, breakout has some key components such as support and resistance zones, volume, trend continuation, or trend reversal. For example, in this chart, which is completely a consolidation area, and we can draw our resistance level on top of it where most of candles have been rejected to go higher and put support level at the bottom of chart where there is a high amount of demand. We will wait to see that next decision of market is what. We can see that in next days price break out and go through the resistance zone. This point is best opportunity to go for long position. One essential question is how to find out breakout structure. There is a lot of breakout patterns such as bullish rectangle, bullish pennant. As I mentioned in all of my videos, memorizing trading information will not help you to become a professional trader. You should always remember that in a consolidation area of the chart, there is a high chance of break out the structure and go for sharp increase or decrease. Breakout identification has three steps. At first, try to find consolidation area. This area comprises from several uptrend and downtrends and price points are rejecting by chart in different locations that we call them supply and demand zones. In second step, try to find swing highs and swing lows in order to draw the dynamic support and resistance levels. Swing lows are the lowest points that chart has rejected this price several times. Swing highs are the points that price could not go higher than them, and whenever they want to go for higher price, the market rejected them. Third step is to find breakout and predict whether the next candles are going to increase the price or decrease. Some traders, after seeing one candle break through support or resistance zones, immediately try to go for long or short position. My advice is do not do this. When a candle breaks the resistance zone, try to get several confirmations and wait for next candles. If next candles have your qualifications, then try to go for long position. Also, 70% of time when price break the support or resistance zones, it is a false breakout. There are some practical ways to avoid false breakout. First technique for avoid the false breakout is to learn price action methods and to try to search for high momentum candles and strong patterns like shooting stars and three black crows for bearish downtrend, and also morning star and three white soldiers for bullish uptrend. If you know about these candlestick patterns, you can easily predict the next move of the market. Additionally, I brought you several instances to digest the breakout concept completely. The first example is from gold market, and as we can see there is a consolidation area, and this is compromised from several swing highs and swing lows. These points are swing lows and these are swing highs, and also then we try to draw the support and resistance zone, and let me grab the line, trend line. This is our support zone. Let me change the color to green to grasp. This is our support zone, and then we try to draw the resistance zone, which is here. And let me change the color to red. So these are support and resistance zones. And after last candles, three scenarios can happen. First scenario is price go higher and higher. That in this case we will go for long position. For example, in this example, if the price goes higher and higher and break the resistance zones, we will go for long position. For example, from here we will go for long position. And the second scenario is price keep the consolidation area and do not break out. And for example, when the price arrive at this point, then the uptrend changes to downtrend and it fluctuates in this area. And the third scenario is the price break out the support level and go lower and lower, and in this case we should go for short position. And for short position, for example, if the price break out the support zone from here, we will go for short position, in this case with the target to stop loss ratio to 1. And also for predicting the scenario, and if you want to know about which scenario is more likely to happen, there are some techniques. For example, one of them is to try to find the candlestick patterns and price action methods. For example, these are our list. Our The second instance is from Solana. As you can see, there is a consolidation area that compromise from several swing lows and swing highs. And also, we try to draw the support and resistance zones based on swing high and lows. And let me grab this, and this is our uh, support zone. Let me change the color to green, and this is our approximate resistance zone, and change it to red. So this is our support zone and this is our resistance zone, and we can see that candles are consolidating between these two zones, which means that there is no specific sharp trend, and this area is compromised from several, for example, uptrend, downtrend, a little uptrend, a little downtrend, and the last one is uptrend. And as I mentioned earlier, there is three scenarios after these candles. For example, we can see that our latest candle is touching the resistance zone, and in next candle, for example, for tomorrow, because it is daily time frame, for tomorrow there is three scenario that could happen. The first one is the next candle go for higher price and break the resistance zone, and the second scenario is it goes down and just fluctuate between these two zones, and the third scenario is it returns to downtrend and breaks from the support zone. And as I mentioned earlier, if we want to predict this scenario, we can see that, for example, there is a big doji candle here that shows the uncertainty in the market, and traders cannot decide whether it is time for buying or selling. And then it is a big reversed hammer, and also after that we can see that there is another doji candle, and also it is a uptrend, and this is a doji candle, which means that traders are not definite about their next decision, and buying in this price is not interesting for them anymore. And my prediction is for tomorrow, the candles are going for lower price, and the overall trend of this area is keeping the consolidation, and it will consolidate between these two support and resistance zones. Thanks for watching the video. Hope you enjoy it. If you have any question related to, for example, topics like FEG, support and resistance, order block, or Heikin-Ashi, or other price action methods and candlestick patterns, you can easily ask me in the comment box, and I will answer them. I will answer your questions as soon as possible. Hope you have a great day. Bye bye.